In this short episode, we're going to discuss, are you a sucker for a sexy business? We're going to take a look at F45, which is a fitness franchise that was started in Australia, came to the US where it has its biggest market. And we're going to take a look and see if that's a sexy business or a phenomenal business. Welcome to the Red to Black podcast with your hosts, Warner and Mario. And today we're discussing F45 and its recent IPO in the public markets and whether or not it's a sexy business or a phenomenal business. Mario, what are your thoughts?
Well, I think you got to look under the hood and figure out that industry before you invest in something that's not making money. That's a speculation. So I think you've done the deep dive on Planet Fitness. What'd you find out, Warner?
So Planet Fitness, which is already an established brand, they don't have the same branding, I would say, as F45. F45 is a smaller gym. They're kind of getting on the coattails of the functional fitness that CrossFit started. So they're doing a mixture of functional fitness. They're creating a community aspect around it, and they have just the killer beats playing the whole time. So you're just pumped up moving, right? So they've created a brand. Mark Wahlberg invested in it. So we definitely have to invest in the business because he invested in it.
Oh yeah, because you got a celebrity on
exactly.
board. We got to put some money to work, right?
Exactly.
It must be
a great business.
Celebrity.
So nothing bashing Mark Wahlberg. I've followed the guy. He's a phenomenal actor. He works his freaking butt off. I mean, the guy's up in the morning working out. He's working all day, creating all these cool businesses. You always have to ask yourself the question: is it a sexy business or is it a phenomenal business? A sexy business, there's a craze, there's a euphoria to it. Now, when you look under the hood, as Mario said, what are these different businesses doing? So going back to Planet Fitness, they're more of I think you pay about $10 a month and you get access to this gym. But it's just a huge gym and you do whatever you want when you're in there, and they provide some services. They made about over 570 million in 2018. I wasn't able to find the numbers from 2020. Who knows? They probably went way down. And they made 570 million, and then free cash flow was 184 million. So it's about 32% margin. Really, really good. Mario and I are not interested in those types of businesses because of the past lockdowns and how it can just cut your business off from the knees. So that's just our take, our opinion. Now you look at F45, their recently IPO company, really sexy launch behind it. Supposedly a phenomenal company. They brought in, do you remember, Mario, how much they brought in? Do you have the numbers in front of you?
Yeah, 82 million in top line, and they lost 25 million. What I want to say is that I think Planet Fitness is a better business just because F45 might be a better place to get a workout in. Like Mark Wahlberg maybe again, the guy's in incredible shape. Great for him. He's probably actually investing. And who knows his exit when he comes in, when he gets out, when he gets paid out. There's more to it than he's an investor. What you have to look at is, okay, for how long? Did he put up some money initially and he's getting paid out as it IPOs and he gets to be the first one to sell? He has no lockout period. He can sell his shares immediately once they're a public company. That being said, Planet Fitness probably makes a ton of money off of people that never show up. They initially come in there, they get motivated January 1, they sign up for a year-long subscription, $10 a month, okay? And they never show up. And that's a great business. It's not a great place to do business or to be in that business, but they're making money on people that don't show up. Let me say that a different way. They're making money by signing people up for the gym, not by getting people into their gym. They're making a ton of money by sending people up for contracts. And whether those people show up or not, it's profitable. If you look at F45, you're looking at hardcore people that are breaking your equipment. They're coming in there and they're in there every day using towels, using the facilities, using your equipment. It's probably not as actually lucrative as a traditional gym membership, Bally's, Planet Fitness, Equinox. What is the other one? Gold's Gym. But as we've seen with government lockdowns, is that really the business you want to be in, where at any point the government can say, hey, you're done for 4 months? It's not where I want to put my money.
Yeah, so you brought up multiple really good points. One of them that I heard was the management and leadership. So we know Larry Ellison's still a huge owner of Oracle, and he has been for many years because that business entices him to stick around because he's making insane amounts of dividend income. He owns the island of Lanai.
30%. Yeah, he owns
90,
Lanai. Yeah, he owns,
90%,
yeah,
right?
Lanai. He owns about 30% of Oracle. The entire corporation, he owns
Phenomenal.
an insane amount of Oracle.
So we're going to do this, discuss this in another podcast. It's important to see what the management's doing. I'm not sure. I haven't researched what Mark Wahlberg's doing, so I can't say. But my point is always look at what the leadership, if it's such a great business, are the individuals still in that business? Because if you are, Larry Ellison's getting paid out in huge dividends, enables him to buy Lanai, multiple houses along Carbon Beach in LA. I mean, whatever fits his fancy. You can buy a US racing team, sail racing team, US World or America Cup. Yeah, correction. America Cup racing team. He sponsored one of my friends, Sean Tucker, who's an amazing aerobatic pilot, one of the best in the world. So he can just go off on these huge binges, and it behooves him to stay in the company because it pays him really well. So we'll do another podcast on what's management doing within the company. That's a huge thing to look out for when you're investing in a company. You also talked about something else, which a lot of these companies are riding this wave. Like I've been sharing with Mario about Soho House, which is this really cool club hotel atmosphere, and their membership actually went up during the pandemic. They actually have I don't know, 10, 20,000 waiting lists or more. And here's the challenge though. I don't think they've ever made any money. So just because you found this really cool, like, you got some techno beats, you got, this Bali kind of vibe to it. It's just really cool to be a part of that club. It doesn't mean that's necessarily a great investment. And you see a lot of these businesses coming out nowadays with these really cool branding. They're like Soho House, F45. It's got this really cool atmosphere to it. And when you look under the hood, like Mario's saying, it's very cash intensive because you have guys using towels, you have guys using equipment. They're really adamant about being there and working out. The focus and the purpose of that business is phenomenal, getting people in great shape. We're not knocking that. We're just always looking under the hood at what the financials are saying. And the financials are telling us right now, 82 million, burn through 25 million. And if you look at their cash on hand, it's 28 million. That's a 3 million difference they have left. Where are they getting the rest of that money, Mario?
They could be selling stock. They could be going to the debt markets. They could be just going into the capital markets, raising debt. Obviously, they're not making operating income, so it's questionable, the investment. As a true investment, it's a speculation. You don't make any money. The fact that it goes public, the fact that a company can go public when it's not making money is kind of it's a disgrace to the SEC that allows companies that aren't even public, go do that. That's venture capital. You're basically saying that our public markets are turning into these venture capital casinos. Okay, some of them work out. I mean, occasionally, there's companies that go public that don't make money, and eventually they turn a profit. But a lot of them, they won't be here 10 years from now.
Yeah, and I saw on F45 on Yahoo Finance, which you shouldn't base that as your underlying like gospel for whether not these financial numbers are accurate, but I saw that they were profitable before the pandemic. But then that shows us during the pandemic, look what happened. It's a perfect example. It's not a company we would invest in because, in our opinion, because when an economic storm comes, we're looking for a company like Oracle that's just chugging along. And when you do your research, the reason why you invest in these companies goes back to Warren Buffett's statement. My investing strategy is lethargic, bordering on slothful. He says that because he's finding great businesses that when there's an economic storm, they're still humming along like an Oracle server. That's our goal for this podcast, is to share with you the tools, the tactics, the techniques that we're using to find these great businesses or build these businesses so you have less headaches in the future. I'd rather have a headache in my mind when I'm thinking about a business versus investing my money and then having a headache, if that makes sense. I want to have the headache beforehand. When I invest, I want peace of mind. Any thoughts, Mario, on that?
Nothing to add, Warner.
Great. Thank you so much, Mario, for your time. Thank you for the listeners. We appreciate it. Please like, subscribe, comment, share it with your friends. Head over to the red to black podcast.com to check out articles. And as always, we're very appreciative of your support, and we look forward to connecting with you in the future.